Hi, welcome to the Market Alert for Tuesday, the 17th of June 2025. So World War III is on, then it's off. Stocks, oil, gold and crypto swing wildly on Mideast headline roulette. As trade policy uncertainty plunges, geopolitical risks soars. So the tariffs and everything else are on the back burner at the moment. US stocks were bid across the board on Monday with notable outperformance in the Nasdaq, so tech stocks dominating yesterday according to this headline. And stocks and crude pair Friday extremes despite ongoing geopolitical events. Well, no surprise is there really that they pair with geopolitics, because that's what I've said all along. You will see new all-time highs despite other headlines saying that the high has now been reached. Can't see it myself. There's too much money still sloshing around in the system, and the Fed's there to back up the system if it fails as well, or stocks start to move lower. So I don't see any end to this. As I said on Friday when the news was announced of the Israelis bombing Iran, the markets were down at the S3 and they would move back to the upside, because that's how it works. Any opportunity where the markets are slammed, they are destined to make their way back. It's just the way the game is rigged and the way it operates now. Economic news for today. We've got German ZEW sentiment. So we've got core retail sales as well, and retail sales out at 130 in the US. But let's have a look at the market action from yesterday and kick off with the Dow. So in the Dow yesterday, we have an inside bar. This means the market traded inside the range of Friday's bar, both high and low. And you can see now price is sideways, trying to find the necessary support to move to the upside. Notice also the drop off in volume yesterday, and also the market closing at the 20 bar, or just below the 20 bar moving average, which is again considered some strength returning to the market. 30-minute chart, electronic market all the way up, cash market opens, moves higher, bit of selling coming in, and then overnight there's a bit of selling there as well. Prices are now sideways in the 30-minute chart and moving back to try and get back above the DP. Just going back to the daily chart, again we've got this situation where we've got a defined sideways range starting to develop from here. But you can see that before we had the sideways move as well, but still nudging to the upside, still bullish. If you look at the weekly chart, not a problem at all. We had a red bar for last week. One red bar doesn't constitute change in the trend, and prices there moving up. So let's have a look at the DAX, see if we've got a similar picture. German DAX, we've got a bit more of a curve to the downside as it were, but we've stopped at the 50 EMA there, and you can also see that we're oversold as well as far as the momentum on the downside is concerned. So the DAX needs to hold the 50 bar moving average there. In the 30-minute chart, you can see the buying coming in at this level. There's a couple of red bars there, but then it's followed by green, and you can see prices trying to move back to the upside. Yesterday the market was just up, bar a couple of bars down for an hour in the middle there before the cash market opened in the US, but then there's a decline from there as profits were taken over further uncertainty, and Trump returning early from the G7 meeting. He just doesn't want to be with them, does he? Let's face it. He's they're not his mates, that's for certain. So he's made his excuses and apparently left the party from what I can see. So there you can see Trump, to cut short, G7 visit citing Middle East after signing deal with Starmer. So again, it's about the deal, isn't it? That's all it's about. He's not interested in being there with these other leaders. They don't like him. He doesn't like them. It's a mutual decision there. So he probably feels, he wouldn't feel uncomfortable. He doesn't have any emotion as far as that's concerned. And just thought, right, that's it. I made, put in an appearance and I'm off. So there we go. Right, let's move on and have a look at the S&P. And in the S&P, we're back to the sideways move there as well within this. So we still need to take out the 60-51. But there's no, you wouldn't think there was the potential for World War III, would you, looking at these markets? Still sideways to higher. Again, moving higher in the cash market. It did fizzle out though, but still holding and needs to get back above the DP and the close. And of course, tomorrow we've got the FOMC meeting minutes as well. The FT 100 is still stuck in a sideways range. We've got two red bars, mainly because they've closed below the 5-bar moving average, but holding above the 20, which is sort of a medium-term trend. And we've got the new all-time high within this market. So again, no great shakes. Yesterday the market was up nicely, but drifting down with the US, and overnight again some buying coming in to support the market at yesterday's low. So still stuck in that sideways trend there. So look how the US dollar's faring with the geopolitical events. So in the US dollar, we're just sideways, aren't we? This is waiting for tomorrow's FOMC meeting minutes because obviously if rates are to remain on hold, that's going to be firm for the dollar. It's not going to be good news for the metals. So let's have a look at those. And in silver, the market sideways again. We've got an inside bar for yesterday, and overnight the market is also inside of this range as well. We have got a bit of buying in this market. And also we've got a bit of a situation where we're becoming oversold while the market's sideways, which actually is a sign of strength. But again, that's going to be dictated by tomorrow evening with rates. Yesterday, the market just sideways. Again, you can still spot the LBMA's markdown every day at the same time. Overnight, they've tried to slam the price, but there's some buying come into the market as prices have come off the low of this bar as well, and there's some green there as well. Meanwhile, gold struggling a bit, doing a straight reversal yesterday of Friday's up move, but again sideways to higher at the moment on the overnight. Again, you can see them buying back in here as well. Gold trying to move back to the upside. Yesterday's slam by the LBMA there as well, which set the tone to bring the markets back as now it becomes the norm. It's amazing how quickly it becomes the norm, doesn't it? That you have a war that kicks off and then it just becomes the norm. Nobody really talks about Russia and Ukraine now. It's just the norm. Market ignores it and everybody carries on. It's just incredible. But that's how money is made. It's by destroying countries and then rebuilding them with new money. And then that's obviously back to the silver there. So yeah, gold at the moment trying to move back to the upside. But again, waiting for tomorrow night's FOMC meeting minutes. So a quick look at the gold-silver ratio. So in the gold-silver ratio, we're straight reversal yesterday as silver held and gold was pushed to the downside rather abruptly by the LBMA and banks at the London fix. So not a lot to report there at the moment. Right, let's have a quick look at the market action for yesterday. There were no trades, so let's just have a quick whiz through and see how things fared yesterday. So most of the work was taken care of in the pre-market session. You can see prices moving up over 100 points or just under 100 there. And then we got to the opening of the cash market with, again, another push to the upside. But this didn't hold. You can see the cluster of red there coming into the market, stuck at the BRN there at around 23,600, and then prices soon starting to drift to the downside, down to the 50 EMA, and then a bit further before stopping. So 100-point swing to the downside there, and then swinging back. So we've got a bit of a range going on, which is a decent size range. Interesting bar there as the market tried to push up. So obviously they sold into it despite the fact that it was green, and then prices again sideways to higher, and then becoming quite sideways and then drifting. Just a lot of drifting up and down yesterday. So you get these situations where the market would be sideways, then it would break out, and then it wouldn't do an awful lot. Heading up to the upside as the Dow opened on the electronic markets, then we drift all the way back down as the Dow futures moves lower, and then into the afternoon again stuck in a range until we just break out again. So it sort of stop-start yesterday for the markets, and then moving up to the R1 we had a potential sell signal there that wasn't filled, and then prices just trading sideways into the late afternoon there. So nearly got back to the high of Friday, which wasn't actually quite achieved, but in the afternoon you can see prices trying the best to get to it. which is why we ended up with an inside bar, which we'll look at in just a moment. Right, let's have a look, see what's happening overnight. And here you can see that not a lot is quite sideways there at the moment. Yesterday's high isn't going to be too far away. It's just a matter of 200 points, which isn't too far away at all. So I wouldn't be at all surprised if prices don't make an attempt to move up to this sort of level today. As we can see there, not a lot. So it's going to be news dependent today, that's for sure. Okay, that's it for this one. Let's see what happens during today. And as ever, thanks for watching. See you in the next one.